10 reasons to invest in gold. There are far more to list, but these reasons cut to the core of gold investing. To learn about all 10 reasons right now, see the link in the video description to read the full article. Also, I will share 2 sound gold investing options, each with their own unique advantages. Be sure to watch the entire video so you don't miss them. If you are unsure right now how your net worth or savings stack up against inflation and the average age of retirement, see the link in the video description to access the free inflation retirement calculator. Gold holds a proven, time-tested track record as an economic constant that spans millennia. Why is it important to have an economic constant? What is the main question every person planning their retirement or building a business need to ask themselves? Are we growing wealth or are we losing wealth? And how do we measure this? Gold is that tool. Reason number 2, de-dollarization. The decline of the dollar as the global reserve currency may be inevitable. Many economic experts such as Bob Murphy, Jim Rickards, Brent Johnson, and Michael Every disagree on the timing and the urgency of this concern, but one common agreement among them: gold will be the ultimate beneficiary. The euro-dollar market, that is, dollars existing outside the US, is quite large. Also, the network effect of the US dollar as a quote safe haven currency still holds sway for now. With this in mind, the dollar's fall may be gradual but inevitable due to several factors. The BRICS nations, Brazil, Russia, India, China, and South Africa, as members, have already been trading commodities such as oil in their own currencies, not the dollar. The introduction of the membership of Saudi Arabia further threatens the US dollar's global reserve status and its dominance as the petrodollar. Furthermore, the original BRICS coalition alone share a global GDP that is now overtaking the previously dominated Western G7 nations. With the 2024 entry of the additional 6 nations, Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates, this will increasingly lead to a more bifurcated global economy and trading system, further isolating the dollar as a central bank reserve. As stated in the previous videos, building on the trend of de-dollarization, central banks around the globe are stepping up their gold holdings. This shift is largely a response to the diminishing purchasing power of their dollar reserves and what can be termed as a response to the weaponization of the US dollar. Irrespective of one's feelings and views of Russia's invasion of Ukraine in the spring of 2022, the resulting economic sanctions, seizure of foreign assets, freezing of Russia's currency reserves, and the punitive restrictions placed on Russia with the use of the SWIFT banking system created an atmosphere of uncertainty among Eastern Bloc nations. Moreover, this collective action by the G7 nations, more specifically the United States, has caused many foreign governments to further contemplate their participation in the dollar system and has created an impetus for these non-G7 nations to further distance themselves from the dollar reserve system. As with the case of the Russian invasion and resulting sanctions, the prospect of being considered and dealt with as a pariah state in the eyes of the Western nations has the potential to transform any country's dollar reserves from a highly liquid asset to essentially useless pieces of paper. Hence, we see the continued accumulation of gold and the reduction of dollars and dollar derivatives of these foreign central banks. Gold is a time-tested and universal form of money that every country trusts. It cannot be inflated or be confiscated if held domestically within the country's central bank. This provides security. Therefore, the mass purchases of gold are likely to continue throughout 2024, further pushing up the price of gold. Reason number 1, world central banks buying gold in record amounts. The U.S. Federal Reserve's approach to increase the money supply and monetize the ever-growing national debt will in turn weaken the dollars being held by foreign national banks around the world. Given this fact, countries with sizable dollar reserves are increasingly converting their reserves into tangible assets such as gold. Nations like India, Russia, China, and Brazil are leading this trend by buying gold at an unprecedented pace, disrupting the balance of power between the East and the West. In years 2022 and 2023, central banks around the world have purchased more gold than any time in recorded history, according to the World Gold Council. In 2022 alone, central banks collectively increased their purchases by 152% to more than 1,100 tons. This was an all-time historic high. The council also expects this strong buying demand to continue into 2024. This mass increase in gold holdings and exodus from the US dollar as a central bank asset is not just isolated to the emerging and expanding BRICS nations. Polish and Dutch central banks within the Western nations are increasing their gold purchases as well. By amassing gold, these institutions are tactically positioning themselves to counteract potential losses that they perceive with the dollar in the medium and long term. If the smart money is buying gold for what they perceive as growing showing weakness in the US dollar, it only makes sense that the ordinary citizen prepare as well. This trend isn't just about hedging against inflation or economic instability. It's a calculated move to diversify reserves and reduce reliance on the dollar. Stated simply, central banks can't print more gold. The trend is clear. Central banks are no longer selling gold, they're buying it. They're reducing the supply on the markets, effectively driving up the demand and the price of gold. As the collective acquisition of gold increases and the reserve holdings of US dollars decrease among these central banks, this will gradually create increased inflation of the US dollar, as the existing supply will be exported from foreign nations back to the United States. Gold is the only true global currency that is accepted due to its time-tested trust and store of value. No other form of money has this legacy and has withstood thousands of years of countless economic cycles. Fortunately, this move away from the dollar will be gradual, which buys time for the ordinary investor. When starting on the path of gold investing, working with a credible and trustworthy precious metals vendor is key. Finding an established gold investment company that understands the many fluctuations of the gold markets and the numerous variables affecting its price will save much time and hassle. Armed with experience and institutional knowledge, these companies can assist you with logical price entry points, positioning, and dollar cost averaging so you can maximize your gold investment. Gold IRAs provide additional benefits compared to merely buying gold from a local dealer. These companies can provide access to competitive prices, transparency, price match guarantees, a sound buyback policy, reliable customer service, and robust security and protection of your precious metals. See the links in the video description to find the right gold IRA company for you. An often used criticism to holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a company that unlocks the productivity of gold by offering a yield on gold paid in gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows total gold ounces held. To learn more about Monetary Metals investment products, see the link in the video description. If you are a serious investor with at least $100K in retirement savings and want to take advantage of the best gold prices, see the link in the video description to attend a free gold educational webinar hosted by Augusta Precious Metals. Thank you for watching.